Well, as we dip back into yesterday's massive earnings day, we need to take a look at Ford stock, right? Something we have to talk about. Ended up around 3% after hours. At one point was up 5%, so not too bad. Definitely ended up positive in the green today at least. So we'll take a look at these earnings and see why we necessarily saw a positive boost there. So as far as this is concerned, I have to tell you right now, I would describe this as a massive beat for this company. Massive beat. Quarter two non-GAAP EPS of negative 35 cents beats by 81 cents, and a GAAP EPS of 28 cents beats by $1.48. This is a company expected to do more than a really negative $1 in EPS, and they posted a profitable quarter actually, which is incredible. No one saw profitability coming out of this company this quarter at all. So I think that's a massive shocker for sure. It is very exciting to see a big beat like that as far as EPS is concerned. So especially with a company that's been somewhat struggling as this one has. So it's good to see it. Automotive revenues of $16.62 billion, down 53% year over year. Not a shocker. Not really the ability to buy a car right now, right? And during this quarter, you couldn't have done it. And they beat by $990 million on that aspect too. So nearly $1 billion beat in terms of revenue as well is very, very nice too. Very good beats for this company. I can tell you that. So that's part of why the stock's up. There's no doubt about it. To see profitability in a time in which you weren't expecting it, it is good. And investors like it. Investors do like that. Adjusted EBIT of negative 1.9 billion versus 4.7 billion negative is the consensus. So definitely a big beat there as well. We like to see profitability for sure, but definitely something worth noting. As far as some more details, we do have the slides to show after this too. Ford expects a full year EBIT loss on the effects of the pandemic. No shocker there. Follows a quarter two EBIT loss of 1.9 billion as we saw. Anticipated quarter three EBIT of 0.5 to 1.5 billion dollars reflects the effects of the pandemic again, and year over year global demand for vehicles being weaker, and lower profit from Ford Credit as well. So adjusted EBIT loss in Q4 is expected, reflecting normal effect on volumes form downtime changeover, and ramp up of the new F-150. Wholesales of the Mach-E and Bronco Sport, which will start shipping to customers in Q4, will not have material effect on the Q4 earnings, and you should expect it next year as far as the demand or the impact is concerned. So I do think there'll be some really good sales from these Broncos. Very exciting. It's a good looking vehicle, and I do think the Broncos will pull in some good numbers. I think the Mach-E will as well. So I think next year's definitely a bigger year for Ford. 2021 should be really a very good year for them, all things considered. So dashing into the slides, as we like to do, they effectively restarted production with robust safety protocols. Naturally, there, keenly focused on cost and cash. Management team's disciplined for the balance sheet, disciplined on keeping that balance sheet good. Global redesign and portfolio refresh. You see from the Mustang Mach-E and the Broncos. Don't know why I couldn't think of it. Continued supporting an autonomous vehicle, connectivity, and electrification, and they're ready for the production ramp up of the F-150, the Mach-E, and the Bronco. Pretty exciting. All focused on quality, as they say. Definitely focused on quality. Adjusted free cash flow looking sucky. Revenue looking sucky. I mean, what can I say? Down 50% year over year. In the first half even of the year, down all over the board. All over the board. You really don't like to see it. But the main thing is the new products here. The F-150, obviously, America's best-selling vehicle for the last 38 years. Power, style, and freedom for a new generation with the Mach-E. That's right, it's all electric, baby. And then the Bronco. It's an iconic vehicle with a slightly new look, but it looks good. It's a good look. So, electric vehicle versions of the number one size full pickup and cargo van globally arriving in the next 24 months, so within the next 2 years, ideally 2021, is when you should expect the F-150 and Ford Transit. I think really the Transit's going to be a massive, massive winner too, because electric cargo van really doesn't exist right now. Could be very big for them to get that out sooner rather than later. And the Mustang Mach-E, range at least 300 miles, available late 2020. I think it'll be a good winner there for sure. And the Escape and Kuga plug-in hybrid, very nice. So available late 2020 with the best-in-class EPA estimated fuel economy of 100 miles per gallon economy, combined with a range of over 490 miles. Very exciting for the Kuga, obviously. Not the most, beautiful car for me, but I do think that overall the thing can do some work as far as just driving concern efficiency. As far as commercial electric vehicles, Ford and VW expect to produce a combined 8 million commercial vehicles during the product life cycle. Ford is building European electric vehicles based on VW's modular electric drive, and Ford is engineering and building medium-sized pickups to be sold by VW as the Amarok. So pretty exciting partnership there, no doubt about it. And Ford and VW own equal stakes. Remainder held by Argo AI founders and employees. So Argo AI is a big investment for them, focused on autonomous driving naturally. So that's really the focus there, is autonomous driving. You see obviously adjusted free cash flow looking booty for this company. Looking booty, but cash and liquidity has risen quite a bit because, well, they're taking a lot of debt on. Revenue, you see sharp declines, and even prior to this pandemic, you saw sharp declines. And this is a very cyclical environment. One thing you need to know about automobiles is it's a very cyclical industry, for sure. There are times in which vehicles will be selling super well, and then there'll be off periods for a few years in which you slow down just a wee bit. But overall, you look here and there's a positive net income of $1.1 billion. So I can't complain. I'll tell you that. The adjusted is not looking beautiful, but overall GAAP net income, which is what I typically judge the company off of, was looking pretty good. And you see just off the adjusted EBITDA, not a good looking thing. It's just not beautiful. $1.9 billion down. I just don't like it. I really, really don't like the adjusted EBIT for this company, how they're measuring it. And I get the principles that they're measuring are obviously different than GAAP. But I typically like to look at GAAP principles personally. Maybe that's just me. You see definitely some negativity really just throughout, both as we look in North America, just decreases. South America decreases. Europe decreases. China saw a little bit of recovery, actually. China has some positive growth to it, actually, which is wild because Ford's been so down in China for a long time. It's good to see actual growth now in China, and hopefully that can change. International, though, down. What can I say? In mobility, what can I say? Down. Ford Credit, you see decreases as well. Definitely recovery from Q1 when they were in junk status. I mean, Ford Credit was pretty well worthless there. We see a slight recovery, but nothing really great. You do see positive numbers, which is, I guess, good to see. Cash flow and balance sheet we'll certainly get into. So outlook, they really only give adjusted EBIT, which again, I really prefer to have some positivity here. For the full year, expected 6.4 of adjusted EBIT. I just want to show the GAAP numbers, but Ford does their thing, I must say. Look at this lovely Mach-E. You see that thing? Q&A. We see that. Let's look at the balance sheet of Ford, because it is worth looking at, as they've been flooding in cash into this company. Total current assets of $114 billion would be your 6 months ago number. Right now it's at 124 billion, so they increased by 10 billion. I'm concerned, obviously, with debt load. I hope that didn't increase that much. Total assets of 258 last or 6 months ago, and now it's at 269 billion. A lot of money there, no doubt. Now for liabilities, you did see a little bit of a decrease in current liabilities. No doubt about it. 98 billion previously, now at 92.7. And total liabilities in general, they did go up. So $238 billion in liabilities right now versus $225 billion 6 months ago. So you did see a raise of over $10 billion in terms of liabilities, while assets saw a raise right around $11 billion, which means overall stockholder equity fell a little bit. Total stockholder equity of $30.8 billion, which compares to $33 billion last really 6 months ago. So the balance sheet is thinning a little bit. I do still think this stock is, hear me out, I think the stock's dirt cheap. Now, even though it's cheap, do I think it's going to move much? I can't tell you it will. This is one of the more boring stocks out there. I can't lie to you. I can't promise you there's a lot of upward movement. In fact, it's only in my portfolio because of the dividend potential. And obviously with suspending dividends, the company's not really beneficial for me because I do think it's going to be hovering around the $7 range for probably a solid year. I just got to be honest. I do think that we'll find a breakout later in 2021 when we finally see electric F-150, electric Transit, Mach-E doing super well. I think it will. The Bronco is going to continue to do well. So I don't think this year is going to be the year for Ford. I think next year will be better, though. Next year will be a lot better. Second half of next year should be a tear, at least as far as what I'm anticipating. I could be wrong on the matter, but this stock's not really worth holding right now in the short term. I really don't think it is. If you pick it up 6 months from now, maybe it's worth it because it'll still probably be around these levels. I can't lie to you. But I'll keep holding on to it because, well, I mean, I'm okay with my cost basis for now. I don't like selling at a loss because I don't think I'll end up selling at a loss years down the road. So I did hope you enjoyed this and have a good one.